In this video, we're going to break down two monster stocks that long-term investors should seriously consider buying in May before the next wave of growth potentially sends these businesses to entirely new levels. These are dominant platforms embedded into the future of commerce, cloud infrastructure, digital spending, and global business operations. And if you understand why these businesses continue compounding year after year, you may start looking at market pullbacks very differently. The first monster stock long-term investors should pay very close attention to right now is Amazon, ticker symbol AMZN. What makes Amazon so fascinating as a long-term investment is that most people still underestimate how many industries this company already dominates. When investors think about Amazon, they usually think about online shopping. But Amazon is no longer just an e-commerce company. It has become one of the most important digital infrastructure businesses on Earth. This is a company operating across e-commerce, cloud computing, digital advertising, streaming, logistics, grocery delivery, artificial intelligence infrastructure, healthcare initiatives, and enterprise software. And the most important part is that Amazon is not simply participating in these industries. In many of them, it is already the leader. That matters because long-term wealth creation in the stock market usually comes from companies that control critical infrastructure and growing industries. Amazon fits that description almost perfectly. One of the biggest reasons long-term investors continue buying Amazon stock is because the company has built an ecosystem that becomes stronger every year. Each business segment reinforces the others. Prime memberships drive e-commerce spending. E-commerce activity fuels advertising revenue. Cloud computing profits help fund artificial intelligence investments. Logistics capabilities improve customer retention. Streaming content increases engagement. And all of that creates a massive flywheel effect that becomes harder for competitors to disrupt over time. That flywheel is one of the most powerful business models ever created, and despite Amazon already being one of the largest companies in the world, the runway ahead may still be enormous. Start with e-commerce. Online retail still represents only a fraction of total global retail spending. Even after years of digital transformation, physical retail remains dominant in many categories around the world. That means Amazon is still operating in a market with long-term expansion potential measured in trillions of dollars. But what separates Amazon from many retailers is that the company spent decades building infrastructure that competitors cannot easily replicate. Warehouses, fulfillment centers, robotic systems, delivery networks, aircraft fleets, trucking partnerships, and last-mile logistics capabilities create enormous barriers to entry. Most companies simply cannot spend the capital required to build what Amazon already has. And because Amazon controls so much of its logistics infrastructure internally, the company can continue improving delivery speed, lowering costs, and increasing efficiency over time. Faster shipping increases customer satisfaction. Higher customer satisfaction increases purchase frequency. More purchases strengthen the ecosystem. That creates a compounding advantage. Now layer artificial intelligence on top of that. Amazon is positioning itself aggressively in the AI race, and many investors still focus only on consumer-facing AI tools while missing the much larger opportunity happening behind the scenes. AI workloads require massive cloud infrastructure. Companies need computing power, storage, networking, and advanced data processing capabilities. That is where Amazon Web Services becomes incredibly important. AWS remains one of the most valuable assets inside the entire company. Cloud computing has already transformed enterprise technology spending over the last decade, but the next wave driven by artificial intelligence could become even larger. Businesses around the world are investing heavily in AI capabilities, and those applications need infrastructure to operate at scale. Amazon benefits because AWS already serves millions of customers globally. And here is what makes the AWS business so powerful from an investing perspective. Cloud computing generates significantly higher margins than traditional retail operations. That means AWS contributes disproportionately to Amazon's profitability. So even if retail margins fluctuate, AWS can continue driving overall financial strength for the company. This is one of the reasons Amazon remains such an attractive long-term investment despite its size. The business has multiple growth engines operating simultaneously, and AWS continues posting massive revenue numbers. Amazon has generated tens of billions in cloud revenue annually, making it one of the largest cloud providers in the world. The demand for AI infrastructure is only accelerating that trend further, but cloud computing is not the only high-margin business inside Amazon. Advertising has quietly become another major growth driver. This is something many retail investors completely overlook. Because Amazon owns one of the largest e-commerce ecosystems globally, the company has direct access to extremely valuable consumer purchasing data. Brands want visibility inside Amazon's marketplace because consumers visiting Amazon are often already prepared to buy products. That intent-driven advertising is incredibly valuable, and Amazon's advertising business has grown into a multi-billion-dollar segment with strong margins. The company continues monetizing its platform more efficiently while maintaining engagement across its ecosystem. So when investors look at Amazon, they should not view it as a single business. They should view it as multiple dominant businesses operating under one umbrella. That diversification becomes incredibly powerful during uncertain economic periods. If retail spending slows temporarily, cloud demand may remain strong. If advertising growth moderates, subscription revenue can still expand. If one segment experiences pressure, another segment can continue carrying overall performance. Few companies in the world have that level of diversification combined with market leadership. Another major reason long-term investors remain bullish on Amazon is management's willingness to invest aggressively for the future. That approach sometimes frustrates Wall Street because heavy investments can pressure short-term profits. But historically, many of Amazon's biggest long-term wins came from periods where the company invested heavily ahead of demand. AWS itself was once viewed as an expensive side project. Now it is one of the most profitable cloud businesses globally. Amazon Prime initially looked costly because of shipping investments. Now it has become one of the most powerful customer loyalty ecosystems in business history. And today the company is making major investments in artificial intelligence, logistics automation, robotics, and next-generation infrastructure. Long-term investors should pay attention to that pattern. Amazon often sacrifices short-term optimization to strengthen long-term competitive advantages. That mindset is extremely difficult for competitors to match because most public companies prioritize quarterly results over long-term positioning. Another factor supporting the long-term thesis is Amazon's ability to adapt. Technology changes quickly, consumer behavior evolves constantly, entire industries can shift within a decade, but Amazon has repeatedly shown the ability to evolve with those changes and often lead them. The company moved aggressively into cloud computing before many businesses fully understood the opportunity. It expanded into streaming while traditional media companies underestimated digital transformation. It invested heavily in logistics when many retailers still depended entirely on third-party shipping infrastructure. And now Amazon is deeply embedded in the AI infrastructure race. That adaptability matters enormously for long-term investors because one of the biggest risks in technology investing is disruption. Amazon has consistently demonstrated that it prefers disrupting itself before competitors get the chance. Financially, the company also continues demonstrating impressive scale advantages. Revenue growth remains massive despite Amazon already operating at extraordinary size. That is difficult to achieve. Many companies slow dramatically once they reach large scale, but Amazon continues finding new revenue streams and expanding into adjacent industries. And because management continues improving operational efficiency, investors are increasingly seeing stronger profitability trends alongside revenue growth. This combination matters. A company growing revenue rapidly while simultaneously improving margins can become extremely powerful over time. Another overlooked strength is Amazon's global opportunity. While the company already dominates many markets, international e-commerce penetration still has substantial room for expansion. Emerging markets continue digitizing. More consumers globally are becoming comfortable with online shopping. Businesses continue migrating toward cloud infrastructure. Amazon is positioned to benefit from all of those trends simultaneously. Now, of course, no investment is risk-free. Amazon faces regulatory scrutiny in multiple regions. Competition remains intense in cloud computing and digital advertising. Economic slowdowns can impact consumer spending, and because the company invests aggressively, profitability can fluctuate during heavy investment cycles. But long-term investing is not about finding perfect businesses with zero risk. It is about finding companies with durable competitive advantages that can continue compounding value over many years. Amazon clearly fits that description. And one of the most important lessons investors should remember is that massive companies can still generate enormous shareholder returns if their underlying markets continue expanding. Many investors once believed Amazon had become too large to keep growing years ago. The company continued proving them wrong. What makes Amazon especially compelling today is that several of its biggest growth opportunities are still early in their development. Artificial intelligence infrastructure, automation, healthcare expansion, logistics optimization, enterprise AI services, and digital advertising monetization could all remain major drivers over the next decade. That means the business investors see today may still look significantly larger and more profitable years from now. And when you combine scale, infrastructure, ecosystem strength, customer loyalty, operational excellence, and long-term innovation under one company, you begin understanding why so many investors continue viewing Amazon as a core long-term holding. This is not simply a company benefiting from temporary momentum. This is a company deeply integrated into the future of how businesses operate and how consumers spend money. That is why Amazon remains one of the most important monster stocks long-term investors should seriously consider buying in May. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. The second monster stock long-term investors should seriously consider buying in May is Shopify, ticker symbol SHOP. What makes Shopify such an interesting long-term opportunity is that the company sits directly at the center of one of the biggest economic transformations happening globally today. Commerce is becoming increasingly digital, increasingly creator-driven, increasingly independent, and increasingly decentralized, and Shopify has quietly become one of the most important infrastructure companies powering that shift. Most people still think of Shopify as a website builder for small online stores. That description massively understates what this business has become. Shopify is essentially building the operating system for modern commerce. The company provides the infrastructure that allows businesses of all sizes to sell products online, process payments, manage inventory, handle shipping, market products, analyze customer data, and operate across multiple sales channels from one ecosystem. That is incredibly important because millions of entrepreneurs and businesses around the world want independence. They do not want to build their entire business on platforms they do not control. They want direct ownership over customer relationships, branding, pricing, and operations. Shopify gives them that capability, and that positioning creates a very powerful long-term advantage. As more commerce moves online, more businesses need digital infrastructure. But many businesses do not want complicated enterprise software systems that require massive technical teams to operate. They want simplicity, scalability, flexibility, and reliability. Shopify delivers exactly that. What makes the business especially attractive from an investment perspective is that Shopify benefits whether merchants are small startups or massive global brands. The platform scales with the merchant. A small business can start with basic tools and gradually adopt more advanced services over time. As that merchant grows, Shopify captures more revenue through subscriptions, payment processing, fulfillment solutions, advertising integrations, financial services, and additional commerce tools. That creates a very sticky ecosystem. Once a business builds its operations around Shopify, switching becomes difficult. Product catalogs, customer databases, order histories, marketing integrations, inventory systems, and payment infrastructure become deeply integrated into the platform. That switching friction becomes a significant competitive advantage over time, and Shopify is not just benefiting from e-commerce growth, it is benefiting from the democratization of entrepreneurship itself. More people globally are building online brands, creator businesses, niche product companies, direct-to-consumer brands, and independent digital storefronts. Social media has lowered marketing barriers, digital advertising enables targeted customer acquisition, global shipping infrastructure has improved dramatically. All of those trends support Shopify's long-term growth potential. The company essentially profits from helping businesses succeed online, and because Shopify operates as infrastructure rather than competing directly with merchants, the company aligns itself with merchant success rather than fighting against it. That distinction matters enormously. Many platforms eventually compete against the businesses using their ecosystems. Shopify has largely positioned itself as an enabler rather than a competitor. That helps build trust with merchants. Another major reason long-term investors remain bullish on Shopify is the company's expanding financial ecosystem. Payments have become a huge growth engine for the business. Shopify Payments allows merchants to process transactions directly through the platform, creating a smoother experience while also increasing monetization opportunities for Shopify itself. And once payments become integrated into the ecosystem, additional financial services naturally follow. Shopify can offer financing tools, working capital solutions, business lending capabilities, and other merchant services that deepen platform engagement even further. This creates a layered business model where each additional service increases ecosystem stickiness. That is exactly the kind of structure long-term investors should look for. The more integrated a platform becomes inside customer operations, the harder it becomes to replace. One of the most impressive aspects of Shopify's story is how effectively management has continued evolving the company beyond its original business model. This is no longer just a software subscription company, it is becoming a full-scale commerce infrastructure platform. And management has aggressively focused on operational efficiency while continuing to invest in growth opportunities. Investors have increasingly rewarded that balance because it demonstrates the company can scale revenue while improving profitability trends over time. That combination becomes extremely powerful in the market. During earlier stages of growth, investors often prioritize revenue expansion above everything else. But eventually, the market wants to see a clear path towards stronger cash generation and operating leverage. Shopify has increasingly shown progress on both fronts. The company has reported strong revenue growth while also demonstrating better expense discipline and improving margin trends. Fool.com. That matters because scalable software and infrastructure businesses can become incredibly profitable once they reach larger scale, and Shopify still has significant room to expand globally. International markets represent a major long-term opportunity. Many regions around the world are still in relatively early stages of e-commerce adoption compared to more mature digital economies. As internet penetration rises and digital payment systems improve, more merchants globally will need commerce infrastructure. Shopify is positioned directly in the middle of that trend. Another reason investors should pay attention to Shopify is the rise of omnichannel commerce. Consumers no longer shop through only one channel. People buy products through websites, social media platforms, mobile apps, live streams, digital marketplaces, and physical retail locations. Businesses need systems that can unify all of those sales channels together. Shopify has invested heavily in helping merchants operate seamlessly across multiple environments. That flexibility becomes increasingly valuable as commerce continues evolving, and the company's ecosystem keeps expanding. Developers continue building applications and integrations that enhance merchant functionality. Partners provide additional services across marketing, logistics, analytics, customer management, and automation. The broader the ecosystem becomes, the more useful Shopify becomes for merchants. This creates network effects that strengthen over time. More merchants attract more developers. More developers improve platform functionality. Better functionality attracts more merchants. That cycle reinforces itself. One of the most overlooked aspects of Shopify's long-term potential is how closely the company aligns with entrepreneurship itself. Every year, millions of people globally attempt to launch businesses, side hustles, digital brands, and online stores. Shopify sits directly at the starting point of that economic activity. And because the company enables businesses rather than controlling consumer attention directly, Shopify benefits from broad economic creativity and innovation happening across countless industries. That diversification can become very powerful over time. Shopify is not dependent on one product category or one customer type. Its merchants operate across fashion, beauty, electronics, fitness, food products, education, digital goods, and many other industries. That broad exposure creates resilience. Now, of course, Shopify also faces risks. E-commerce growth can fluctuate depending on economic conditions. Competition remains intense. Smaller businesses can be vulnerable during downturns. And technology evolves quickly, requiring constant innovation. But the long-term thesis is not based on short-term quarterly fluctuations. It is based on the idea that commerce will continue becoming more digital, more independent, and more globally connected over time. And if that trend continues, Shopify is positioned extremely well. What makes the stock especially interesting today is that many investors still underestimate how large the company could eventually become if it continues scaling its ecosystem successfully. This is still a relatively early-stage infrastructure story compared to where global commerce may be heading over the next decade. As more businesses seek direct customer relationships and greater ownership over their brands, platforms like Shopify become increasingly valuable. And unlike businesses heavily dependent on advertising cycles or consumer entertainment trends, Shopify sits much closer to core economic activity itself. Businesses need commerce infrastructure regardless of which social platform is popular or which marketing trend dominates temporarily. That foundational role matters. Long-term investing often comes down to identifying companies positioned at the center of durable structural trends. Amazon benefits from cloud infrastructure, logistics dominance, digital commerce, and AI expansion. Shopify benefits from digital entrepreneurship, independent commerce, payments growth, and global e-commerce adoption. Both companies are deeply connected to long-term economic shifts that likely continue for years. And importantly, both companies continue reinvesting aggressively to strengthen their competitive positions, rather than simply protecting existing businesses. That mindset is critical. The companies that dominate future markets are often the ones willing to invest ahead of demand, while competitors focus on protecting short-term profitability. Shopify has consistently demonstrated that long-term mentality. Another major strength is management's understanding of merchant needs. The company has repeatedly focused on empowering merchants rather than restricting them. That merchant-first philosophy has helped Shopify build strong loyalty and trust within the entrepreneurial community, and that trust can become a major intangible asset over time, because once entrepreneurs believe a platform genuinely supports their growth, they are more likely to expand their businesses within that ecosystem rather than migrate elsewhere. Financially, Shopify also maintains strong flexibility because software-based infrastructure businesses generally scale efficiently. As revenue grows, the company can potentially expand margins significantly if operating leverage improves over time. That possibility is one reason many long-term investors remain excited about the stock despite volatility, and volatility is important to discuss here. Growth stocks often experience significant price swings. Investor sentiment can shift rapidly based on economic conditions, interest rates, or short-term market fears. But historically, some of the best long-term investment opportunities emerge during periods when high-quality growth companies traded below peak enthusiasm levels. Long-term investors understand that temporary volatility does not necessarily change long-term business quality. What matters most is whether the underlying company continues strengthening its competitive position, growing its ecosystem, and expanding its market opportunity. Shopify appears to be doing exactly that. And when you step back and look at the broader picture, it becomes easier to understand why many investors still see enormous long-term upside potential. This is not simply a company selling software subscriptions. This is a company helping power the future of global digital commerce. That is why Shopify remains one of the monster stocks long-term investors should strongly consider buying in May. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now here is the big question for you. Which company do you believe has the stronger long-term competitive advantage moving forward? Amazon with its massive infrastructure ecosystem and AI expansion opportunities, or Shopify with its growing role as the backbone of independent digital commerce? Let me know your thoughts in the comments below. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.